The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for the market this month. This is episode 2 of 2025. I'm, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, hi, Anna. Good to see you.
We're virtual this month. Luckily, next month, I get to join you again in person. I'll be coming to your neck of the woods in Kelowna, but for this month, we're going to have to enjoy each other's company virtually.
Yeah, exactly, right? The old school.
Old school, that's right. We did this for a long time, Bruce, during the pandemic. I thought that we'd be talking about maybe some new topics this month, but we remain in the same place as we did last month, talking and thinking about tariffs, recession, interest rates. So we're going to dive into all of that. And of course, we're going to end off with some exciting issuer news for the CSE issuers. Let's jump right into it. Let's start off with tariffs. Since taking office, President Trump's tariff policies on Canada, Mexico, and China have remained a moving target, sparking retaliatory measures, market chaos, and heightened fears of inflation and recession on both sides of the border. Trump argues that tariffs will generate billions in revenue, reduce national debt, and bring manufacturing back to the U.S. Meanwhile, Canada has responded with a surge of economic patriotism, pushing to diversify trade beyond its southern neighbor, though the long-term impact remains uncertain. The tariff battle escalated quickly. First announced on January 20th, Trump imposed a 25% tariff on Canada and Mexico by February 1st, along with a 10% levy on Canadian energy imports. Canada retaliated with $30 billion in counter tariffs, prompting a temporary suspension on February 3rd. However, by February 13th, Trump raised steel and aluminum tariffs to 50%, imposed digital services taxes on U.S. tech firms, and fully reinstated tariffs on March 4th. Additional measures followed, including exemptions for major automakers on March 5th, new tariffs on Canadian dairy and lumber on March 7th, and a 25% export tax on Ontario electricity by March 10th. By March 12th, Trump doubled down, increasing steel and aluminum tariffs once again. These policies sent shockwaves through financial markets. By mid-March, fears of U.S. recession wiped $1.7 trillion off the S&P 500, while the NASDAQ 100 lost $1 trillion in value, underscoring the deep uncertainty surrounding global trade. So, Bruce, here we are having this conversation once again, my friend. Since we spoke last, which was in mid-February, what are your thoughts on this continuous potential trade war and imposition of tariffs with the U.S.? And how is this going to affect the market?
Yeah, it's like somebody's playing with the VCR and they're going fast forward and rewind. The biggest thing is really the fact that it's creating so much uncertainty. We get, these announcements that there's going to be tariffs, there's going to be new tariffs, there's going to be additional tariffs, there's going to be tariffs on these days, then there's extension, and it just is really kind of freezing everyone up. They're not really sure what to do when the threat of the tariffs seem like they're, more imminent. Market tends to drop. When they tend to be a little bit less serious, then the markets tend to rally. And so it's been really difficult, unless you're some type of day trader, to really invest and to know, with any type of certainty what the future looks like.
Absolutely. And how is this affecting Canadian markets? I mean, we obviously saw, huge swings in the U.S. market. How are we seeing this play out in the Canadian market?
If you actually look at it from a percentage standpoint, the Canadian markets haven't dropped as much from really kind of the February 1st or 2nd day announcement to when we were recording this. The U.S. markets have dropped more, which is kind of interesting, because you would have expected, kind of worst case scenario, when Canada was the one that was going to be hurt because they wouldn't be selling as many goods into the States, that, there'd be this massive drop in Canadian stock prices. But I think, and it's not to say that they haven't been hurt, because there's certainly been areas that have been hurt for sure. But I think there's a few things going on. One is that, you know, we're not certain what they're eventually going to be, and maybe perhaps that has an impact. And then the second thing is that, you have certain areas that have been hit harder than others, but you've had a lot of businesses that have also tried to prepare for this in their own ways and as much as they can. To say that it's not going to have an impact if he puts those tariffs into place and they stick, you would just be fooling yourself. And I suspect that, once that actually happened, you probably see some more weakness in markets until it really got a better idea of exactly, what was going to be affected and by how much and what wasn't.
Now, as most Canadians, I know even for myself and my RSPs, there is a percentage of my holdings that are in the US market. And I think that probably speaks true to most Canadians. Can you speak to how that might affect us? Is that something that we should reconsider?
Well, I mean, there's been a bit of a push in some of the pension funds in Canada. There's been a push for them to start bringing investments back into Canada. Whether or not, that's a pretty far stretch for patriotism for sure. It'd be great to see because it would really help the Canadian markets if you had all that capital returned back to Canada. But ultimately, most people want to generate the best returns, and they're going to go with their capital where they see the best opportunities. But interestingly enough, we like to track a lot of technical tools, and some of those technical tools were actually turning in favor of Canada even before Trump was elected. So back in the fall, when he was about to be elected, we were starting to see some of the early indicators showing that, Canadian capital flow was actually picking up versus the US. And I mean, the size of the markets are completely different. So it just takes an increment a little bit flowing into Canada to really generate positive returns for Canada. And I think that's part of why you may have seen this outperformance since that February 1st or second deadline when they first started talking about tariffs. And if you look at the US markets compared to Europe, I mean, there's been a huge discrepancy there because the European markets have performed quite strong while the US markets have been falling.
Right. Now, this is just out of curiosity. We're hearing a lot, obviously, in our place in Canada about the tariffs that are being imposed on Canada and Mexico. But there is also tariffs that are being imposed on China. Do you see that affecting us at all?
Well, it'll depend on how it is affected. I mean, one of the proposals that was thrown out there to try to get the tariffs, the North American tariffs removed was that, maybe we band together as North America to tariff Chinese goods at a heavier rate. So, it's potential that that could be something that we would see happen. And, there's been talk already of, some of the big global companies that use and get a lot of Chinese goods in, that they've already gone to China and asked for, them to be more competitive in the front of these tariffs. So Walmart was the example that I had heard, where Walmart had gone to a lot of their suppliers in China and said, look, you guys need to get better pricing so that our consumers aren't impacted as much when these tariffs go into place.
Interesting. Look, Bruce, I feel like episode 3 of 2025, we might be still having this conversation. I mean, it seems to be changing on a daily basis, so it's really hard to tell how the markets are going to continue to react, but it has been a rough start, hasn't it?
It would certainly be nice if we didn't have to talk about them anymore, if they were just resolved and everybody went back to where it was, but I'm concerned that that may not be the case.
Yeah, it doesn't seem like it's going anywhere soon. The pendulum is certainly swinging between both sides of the border, but hopefully we'll find some middle ground and able to, reduce some of the chaos that's out there. One thing that we talked about so much when we had market recap is we talked a lot about interest rates and kind of there was so much movement in 2023, 2024, and we're talking about it again. So what are the forecasts? What's happening in the interest rate world?
Yeah, I mean, we when we first started market recap, we were talking about, inflation going up and rates going up to try to slow down inflation. And now we're actually seeing the other side of that. And so the day that we're recording this is the day that the US announced their inflation, and it was lower than expected. And we actually are forecasting for the next few months that you will continue to see this trend down in inflation in the US. That has to do with a couple things. One is that we have seen some of these commodity prices like oil dropping down over the last few months, and I mean that has an impact. And the second thing is just the base effect. So comparing it to a year ago, because that inflation number is looked at over the year, and so the numbers were higher a year ago and they've come down, and so that helps to bring things down, and that also has an impact on interest rates. So now with inflation coming down, it gives the central bankers more opportunity to actually lower interest rates. We saw that again the day that we're recording this in Canada. We saw them drop by 25 basis points. And interestingly enough, with everything that's going on with the tariffs in the US and the market instability, rates have come down, and rates tend to lead what the Fed does. And so if you look at the beginning of the year, the market was forecasting that there'd be 2 interest rate cuts for 2025, and now that's actually gone to 4 for the Federal Reserve. So they're anticipating that the Federal Reserve is going to drop by a full percentage point over this year versus only a half a percentage point, which was forecast just whatever it was 2.5 months ago.
And this is fairly important in what we're seeing with the tariffs, because we need lower cost of capital, right, for us to be able to function in a better way within our own borders. Would you agree with that?
Well, certainly that's the call from Wall Street, right? Is that they want lower capital. That's always the case. I mean, if you think back when rates first started going up, there was lots of talk that 2023 was going to be a recessionary year because rates had gone up so much. And the economy actually has done fairly well in the face of these higher interest rates. And so, the Federal Reserve has always used interest rates as a tool to try to stimulate things when there's a slowdown.
Right.
And the question will be is, do these tariffs or do the uncertainty of the tariffs start to freeze people up? We talked a little bit in the past about the small business survey and how it spiked up in November after Trump got elected on the fact that there would be lower taxes and lower regulations. And now, it's starting to fade a little bit. And that confidence can lead to, contraction of the economy. And if that happens, then what does the Fed, what does the Bank of Canada do to try to stimulate the economy? Will they lower interest rates to try to get capital to flow into different areas of the economy?
Absolutely. You did say one word in there that I do want to ask you about, because we're hearing it everywhere that we look right now, is the word recession. Is there concerns about pending recession in both Canada and the US?
Well, certainly I would think that that's why the market has sold off as aggressively as it has. If you look at the Nasdaq in the US or the Russell 2000, which is smaller cap stocks, they've dropped 10% plus in the last 4 weeks. And I think that is not just the market worried about tariffs, but also worried about those tariffs causing a recession. The consumer spending starts to fall off. And you saw that with, Walmart had weaker numbers, Costco had weaker numbers, and that's the consumer spending. And the consumers, are concerned, okay, what's happening with tariffs? Are things going to be more expensive? What do I need to do? Do I need to save some money? And that, consumer portion of the economy is so big that you start peeling that back, and that's where you could see a slowdown. We haven't seen that in the numbers yet, but it is so early, right? So that's what, the market's always looking ahead, and we're always trying to figure that out. And that's what we'll watch over the next few months to see if, oh, is this just like, kind of a little bit of loss in confidence, but the economy continues to click along, or is it, something different?
Okay, so we're not there yet, but we're paying close attention, right?
Yeah, exactly. We sort of, watching really carefully to see if we start to see those numbers slowing.
Okay. Okay, good to know. Okay, I want to talk about, I know some data that you look at when you're looking at the markets is the VIX. Can you tell us what the VIX is and what it's used for?
Yeah, so the VIX is looking at option pricing and option volatility in the markets. And options are really complicated. They can be really challenging to understand. If I said I understand that 100%, I would be lying to you. I think that there's probably some specialists who deal just in the option market that understand. But other than that, it's complicated for sure, to say the least. But what we use the VIX for and what we track with the VIX is that we're watching the level of the VIX, and we sort of have different categories for where you want to balance things with your portfolio. So we always talk about below 20 being in a very investable area. So you want to get invested. You can be comfortable getting invested there. Between 20 and 30, there's a lot of chop. Markets can really move up and down. And then above 30, it's it's really challenging to make money because there's so much volatility. Often there's a lot of fear and things are headed to the downside. So we talk about those ranges, and that's how we kind of guide our portfolio and how active we are with our portfolio in those different ranges.
And right now we're seeing a decent amount of volatility.
Yeah, there's been a fair bit. So, I mean, if you go back to kind of pre-tariff talk, we were sitting kind of in that 15, 14 level. And then we moved through that 20. And now at the time of the recording here, again, we're sitting around 25 on that VIX. So it's kind of in the middle of that choppy range. It was almost at the 30. It's pulled back a little bit. And so it is in that choppy range now. So you see that with the markets that, you have big up days, you have big down days, depending on, kind of the mood of the market and what's happening.
How often does this data come available? Is this a monthly piece of information we receive, or?
No, it trades real time. So the
Okay.
VIX data is being updated throughout the day, and you can watch that, that VIX number. It'll move up and down throughout a trading day based on, the risk and the perception of risk in the market.
Okay, let's talk about, and we talked about this again last month as well. We are seeing all-time highs yet again for gold and copper. Let's talk about that and how that is affecting the markets. You touched on why you thought we were seeing these all-time highs, but now we're having a conversation 4 weeks later, with all of this tariff talk and trade wars, and we're continuing to see those two commodities go up. What are your thoughts there?
Well, the really interesting piece, in my opinion, is the copper. So, we just a moment ago, we just talked about recession and the concern about recession. And you wouldn't expect copper to be making a new all-time high if we were in a recessionary period. They refer to copper as Dr. Copper because it has a PhD in economics, is what the, sort of Wall Street saying is. And so typically what you would expect is that, if the market was starting and investors were starting to become concerned about a recession, the copper would actually be dropping because it's such a used industrial metal that that would be forecasting that there would be some type of recession, imminent or on the horizon, but it hasn't been the case. Gold is a little bit different in that, gold tends to be an inflation hedge. It tends to be almost a currency in itself. And it tends to be a store of value and a safety area. And I mean, that's why money's flowed in there, because you've seen central banks move out of the US dollar and buy gold. And then you've also seen investors move into gold. And then the last thing is that, gold it's tougher and tougher to find gold and bring it out of the ground. It's more expensive all the time. And so as a result, the cost to produce gold's going up, and the amount of gold that's out there is more challenging to add to because of that cost.
Absolutely. Okay, I know that copper and gold are doing well, but just curious what your thoughts are, because we've had an interesting month in the cryptocurrency space. Do you have any thoughts on that?
So, I mean, with cryptocurrency, it tends to be a risk on asset. And so, when the animal spirits are really flowing and you see markets doing well, cryptocurrencies tend to do very well. And I mean, to the point where, when the tariff started to happen, the tariff conversation started to happen, that's where, cryptocurrencies peaked out and now they've declined. And so you would probably need to see some stability and then see, movement back into kind of a risk on atmosphere before you would really see kind of new highs in cryptocurrencies.
Okay, interesting. Interesting. Well, we'll see what happens there. Okay, we're gonna get into my favorite part of our show, Bruce, other than getting to spend time with you and talk about some CSE issuer news. So we're having this conversation just on the heels of myself and the rest of the CSE team getting together at the annual PDAC conference, Prospector Development Association of Canada. It was a very, very interesting year. We've obviously gone through some interesting years at PDAC. I'd say over the last 10 years, and there was a lot of energy, Bruce. There was a lot of excitement. There was a lot of people there. There was a lot of issuers there actually raising capital. There was people raising capital on the floor of PDAC, which is not something I've seen in a very long time. So it was very exciting times. We're also seeing a lot more. I feel there's a lot more delegates coming from various countries that are wanting to get more engaged with the capital markets in Canada, which I thought was really interesting. So a big kudos to PDAC. They do an amazing job, and just to the people that travel from all over to come and participate in that event. I wanted to mention two of our issuers today that just completed some capital raising, or almost as much. Highlander Silver has announced a $25 million bought deal with Ventum Financial. For those of you that don't know Ventum, it was PI Financial, is now called Ventum Financial, as the lead underwriter and sole book runner. The company intends to use the proceeds from the offering to fund the advancement of exploration activities at the company's San Luis Gold Silver project in Peru. There's some pretty big, impressive names if you go to the press release that are interested in participating in that financing. So that's great to see these big names coming in and to see a bought deal even, huh, Bruce?
Yeah, it's great to see for sure that, we've talked about before that for the last few years, the smaller cap markets have been, kind of frozen out, and we're seeing more and more capital raises, more interest in those areas. And now, with gold and silver and copper picking up, you're seeing even more interest.
Absolutely. And seeing a nice, healthy capital raise like that, that's a bought deal, is just really nice to see. I mean, the junior markets really do suffer when these big global economic factors occur, but we are still seeing that there is some support level in the junior markets in exploration and advancements of the good properties, which is great. We also saw Tokvan Ventures. They closed an oversubscribed private placement. There was a bunch of private placements that I'm not going to mention today that were all oversubscribed. I also noticed that, which was very cool to see, of $3.15 million to advance expanding gold and silver targets in mine-friendly Sonora. Tokvan's Advancing Gold and Silver project, which is in the mine-friendly jurisdiction of Sonora, Mexico. Through ongoing exploration programs, the company is unveiling its high potential at its Grand Pillar Gold-Silver project, which holds 100% interest in over 21 square kilometers of prospective area and a majority ownership in 1 square kilometer area shared with Colibri Resources. So congratulations to them. What I thought was interesting is most of the private placements that I'm seeing, Bruce, are in gold, silver, or copper. So, it wasn't that long ago that anything battery metal or rare earth was the focus of everyone's attention. Do you think we're going to continue to see these precious metals get most of the attention right now in this time?
Yeah. With the fact that you see gold at an all-time high, copper at an all-time high, silver's not quite there, but it's certainly done well. Yeah, I think that there's going to be more interest in these areas because now a lot of projects that weren't necessarily feasible before based on the price of the metals now are feasible. And, there's a lot of exploration that can be done in a lot of areas that people want to explore based on that new economics.
Absolutely. The final issuer that I did want to mention, Bruce, because I thought this was interesting as well, is our issuer, Blue Lagoon Resources. They received their mining permit. They have a property up near Smithers, BC. And we have an updated issuer clip with them coming out. So make sure you go to CSC TV to check out our interview with Rana Vig, who's CEO of Blue Lagoon. But one thing I thought that was interesting is that we're seeing, this first permit come through the gate in quite some time in BC. Do you think what's happening in the US right now will help us start to open up our internal borders with other provinces, with permitting exploration programs, putting them into production? Do you think that this will help the Canadian economy start furthering within itself?
Well, I know we talked about that in February about the fact that, the provinces were now, or several of the provinces were now moving towards a more fast track of bigger projects. And I think that trickles down and continues to work its way to the grassroots exploration level as well, where, permitting will hopefully be quicker and, there'll be less red tape to get it done so that, we can actually start building and developing some of these projects.
Absolutely. Absolutely. Okay, I want to ask you, we've talked so much about resources. Bruce, is there any other sector right now that is of intrigue to you that you're watching?
Well, I mean, there's always lots of interest in technology. That being said, I mean, the technology sector has been going through a bit of a correction here, so that's always interesting. Healthcare, there's always lots of interesting kind of health tech companies, especially in Canada. There's lots of those that are on the radar. They tend to be, kind of that smaller mid cap size before eventually they get taken out. It seems like by larger US companies. And then the last area that, we continue to see lots of interest is in the industrial area. And there's lots of kind of interesting industrial tech companies as well that are Canadian, sort of that small mid cap again, that are doing some really innovative things that are, kind of leading their industries. And again, those tend to do really well and then eventually get gobbled up by a bigger player, but they haven't yet. So that's great.
Amazing. I love it. Okay, Bruce, we'll have to wait a few weeks before I get to do this with you again. What should we be paying attention to until we meet again in April?
Well, unfortunately, it's Donald Trump's tweets. That seems to be what has a bearing on the markets. And then we're going to want to see whether or not any economic data that's starting to come out is being impacted by the uncertainty of these tariffs.
Okay. Well, we'll watch out for that. Listen, Bruce, it's always such a pleasure to chat with you. Thank you so much for your insights, and I look forward to chatting with you next month.
Yeah, we'll see you in April.
We'll see you in April.